Hello, it's Friday, August 24th, 2007. This is Brian Shannon speaking from Alpha Trends. The market's been closed for a bit here, and we had a very nice day today. The S&P 500 spiders closed up $1.81, or 1.24%. Again, on diminishing volume, but I'm happy to say that all week I've been pointing out the diminished volume, but at the same time I've been pointing out the fact that the only thing that pays us is price, and that's what we have to pay attention to. A lot of people will say it's up on low volume, therefore it should fail or it will fail, and they'll be looking to sell short. But as I've been pointing out on the shorter term time frame, we've had a rising 5-day moving average here for the last 4 days, and the benefit of the doubt goes to the buyer when we have the rising 5-day moving average for the intermediate term time frame. I had also pointed out somewhat skeptically the inverted head and shoulders pattern on this 10-minute time frame, which would give us a target up near 150. Here it is, this pattern here, and that would give us a target up near about 153 is what I've been talking about. And right now it looks like it's on its way towards there. That seems to be the path of least resistance in the short and intermediate term trend time frame, that is. But on the daily time frame, again, we've still got that declining 50-day moving average. So it means that definitely trade according to what you see in the shorter term time frame, but we have to be suspicious of the low volume, and we have to be suspicious because the 50-day moving average is still declining. This market is stronger than I have expected it to be, and I think a lot of people, but the point is you can't let those type of opinions get in the way of objective analysis. Objective analysis takes a look at price action and says it's making higher highs and higher lows on these shorter term time frames, and price is what pays, so there's no reason to look at it stubbornly and say there's all kinds of problems with the economy or subprime loans or whatever they're talking about on TV. You have to instead focus on what is the market doing. The market is continuing to move higher, and if you're selling short because of an opinion, you're wrong, and you've got the losses in your account to show for it. So we still do have mixed signals, though. I don't want to sound too optimistic because I'm still not. I'm cautiously optimistic. I'm optimistic because we have a rising 5-day moving average. We have an uptrend here. We had that huge volume in the markets that marked this low right here, and I've kind of thought that maybe the low volume meant we were going to pull back and test those lows. But now it looks like the market has made some important signs of recovery here. I don't think it's going to continue to move higher, but again, it's not what I think, it's not what any of us thinks, it's what we can objectively observe by looking at price action. The path of least resistance is higher on the short term. That's the important thing. The market had spent 8 days below this 200-day moving average, and now we've got the third closing high, close above that level, and the market closed right at the highs. I'm sure there's a lot of short sellers who are just getting murdered in here because they're stubbornly looking at the economy and saying, this can't happen, this can't continue, or whatever. And I didn't think the Fed would have the ability to have that much influence on the equities markets, but they have so far. Let's see if it can maintain or if this will turn out to be a lower high. This high right here from the August 8th high, right at about 150.5 or so. If the market can get above that somehow next week, then we will have broken this pattern of lower highs and lower lows. But we're still in a downtrend, and that's again represented by the 50-day moving average. So this short-term action, if you're long in here, this is very good. But don't get too excited. Make sure that you play a strong defense and keep your stops in place and continue to ride the trend as long as the market tells you that's the right thing to do. And the semiconductors have been kind of the laggard in here. I was looking for, originally last week when it touched that 200-day moving average, I was thinking maybe it heads up towards about 37.5. Today, it decisively moved above that 37.5 level in this prior level of support. So now we've got the semiconductors that are participating as well. We do have a declining 20-day and 10-day moving average. The 50-day moving average is kind of flattened out, and I changed the color of that and the way it looks so it's a little bit more visible here. So hopefully that's a little bit easier to see that 50-day moving average. It's this dotted line right now that I'm kind of outlining over. But that's up at about 38.5. Maybe we get resistance up there. I don't know. We'll see. There were only inflection points. They're an area to be, that is moving averages. They're an area to look for evidence of selling, but it doesn't mean sell or sell short there. Just look for evidence of it. Now we've got to look at this market and say, what I said yesterday was it needed to get back above 38.30 or so before we could think that maybe the buyers were regaining control. I was a little bit concerned yesterday that it made a lower low, and I was thinking perhaps this was a lower high at 37.30. So once it made it above that 37.30 today, the market really took off and held on to those gains throughout the day, closing right up near its highs. We're looking at a 2-minute time frame right now. Back to the 10-minute time frame. Now I would look for that 37.20 to 37.30 to be our support going forward here. A pull back towards that level. Hopefully this market can continue to heal itself, and it's still in kind of recovery mode. We don't know if the worst is behind it yet, but we're really seeing encouraging signs on these shorter term time frames, and that's a good thing to see. Obviously, the IWM, we've seen 4 occasions where that 200-day moving average has acted as resistance over the last couple of weeks, and that's up at about $80.20. So that's our important level of potential resistance still, 80.20. Breaking above that, we might see a quick move, at least up towards that 50-day moving average near about 81, and maybe back to these lows near about 81.5. The 50-day moving average is still declining at a pretty good clip here, so that remains a reason to be overall just kind of suspicious. The low volume is still a reason to be overall suspicious. Yesterday I said that the short-term time frame, it looked like it was breaking down, but the positive thing here was that we still had a rising 5-day moving average. And this 5-day moving average, when you look at it on the intraday time frame, is just really been, over the last 6 months or so since I've really been emphasizing it, it's been a very important level of support and resistance for all of these markets. So you definitely want to continue to keep an eye on that. The direction of the 5-day moving average is higher, so perhaps we're, this $80.10, $80.20, the more times resistance or support is tested, the more likely it is it works through that source of supply right up here, and it could lead to a breakout. And if it does, you always have to ask yourself, what is the market least expecting? I think it's at least expecting a push back above that 200-day moving average now that it's been locked under there for about 3-4 weeks. So moving above it would catch a lot of participants off guard, and that could lead to a sharp move higher. So just something to keep an eye on and be aware of for next week and the coming weeks. But the odds don't favor it, except for maybe a short-term move, because we've got that 50-day moving average is still declining. So still a lot of mixed signals. It's easy to look at the headlines. It's easy to look at a 1.3% gain like we saw today and get bullish about it. But overall, when you look at the structure of this market, it remains in this downtrend. We had the 10 and 20-day moving averages moving, crossing that is. That represents indecision. Indecision occurs at turning areas in the market, either stage 1 accumulation or stage 3 distribution. There's a case that we could make that this is accumulation before this market turns back around, but it's still too early to call it healed and recovered. The Qs, the Nasdaq 100, again, a real nice move here. It's up 67 cents, 1.4%, and back above the 50-day moving average. Last week when it touched this 200-day moving average, there's no way I would have believed that we could get back up to that 50-day moving average that quickly. But fortunately, it's not opinions that pay. It's looking objectively at the price action. And here we've had this 5-day moving average rising for the last 3 days. And when it is rising like that, you want to give the benefit of the doubt to the buyers in the intermediate term. The huge volume right here, I was looking for a move, perhaps up to that 47 level. 47 was taken out decisively. That's going to still be important going forward, so you want to monitor that number. But this 5-day moving average is right around the lows from 2 days ago, right here at about 47.20. So there should be support at 47.20 and 47. The market's a little extended in the short term, so we might see a pullback early in the week, but overall, you've got to be impressed with this action and the ability of the buyers to come back in here in the face of all this uncertainty that they're telling us about in the news. And I think I'm going to turn my TV off again. I've been watching that TV, the CNBC, much more over the last 2 weeks than I ever have, and it really hasn't helped me one bit.